Joining me for a look at your markets at midday is Makwe Masilela from Makwe Fund Managers. Makwe, thanks so much for your time this afternoon. So while we wait for, the US Fed minutes out tomorrow, things have been heating up in Europe. I mean, we have ongoing peace talks out in Saudi Arabia where the Russian officials and US officials meeting up. Kiev nowhere in sight. We also have preparations for the German election taking place in Germany, that election taking place next week. Are these developments things you've been watching? Are they things that have been on your radar?
Definitely, and we have to be cautious, optimistic about the whole thing. I mean, if the guys manage to sort out the conflict, though we know for now it's bilateral between US and Russia, and the guys have raised their concerns, including Europe, that are concerned. But at the end of the day, should they get to a very good conclusion about this whole thing, we know consumer confidence, investor confidence, easing of financial conditions will improve, meaning that generally will be good news going forward. And as well, the minutes as well, tomorrow that will be getting for the Fed. Remember, we've always been wanting to know the outlook when it comes to the interest rate in the US. We know that it's got all these other implications, whether it's local interest rates or whether it's commodity prices indirectly because of affecting what is happening with the US dollar. So those things continue to be on our radar screen. And Germany continues to be critical. Remember, that's the biggest economy in Europe. And we've been seeing now lately, they've not been doing that great. So we hope that probably things will shape up because you need these economies to grow. We don't want or expect them to start shooting out the lights. Truth be told, since the days of COVID, we've not been doing that okay. Things have been very volatile, too much risk out there. Maybe we deserve some break, and hopefully Donald Trump is listening, that maybe he stops all these things to keep on encouraging volatility in the markets.
I think of that Eurozone GDP print for Q4, and one of the things that were mentioned was struggles in Germany and in France, and really on the back of the political shifts that are taking place there. So something to really worry about. Let's move over to Asia. President Xi Jinping meeting up with tech leaders yesterday, a move some say signal a change in sentiment when it comes to, tech stocks, because we had that big tech clampdown about 4 years ago. So I saw Alibaba rallying, Tencent rallying. We also saw Naspers and a Process rallying on the back of that. What are your sentiments around, the Asian tech rally we've been seeing recently?
I think that's one of those rare meetings happening. And I think things get to be shaped and maybe moved by what Donald Trump is doing, These guys, the way they've been handling businesses, I think they're realizing that now we have to see ourselves as one with our businesses. Let's put a joint front because we know of the potential tariffs that the guys might be imposing. And we know, especially when it comes to tech, that the guys have been more worried about national security. We know the story about TikTok getting to be sold. So I think it's important that the guys started showing a united front. And fortunately for ourselves, we managed to benefit, at the back of Tencent. But other than China doing all that, I think that's what all governments should be doing, and this is something that should have been done long time ago. We don't have to see ourselves as them and us. We should see ourselves as maybe one, whether it's South Africa or China. So it's one of those rare meetings, and people are excited. And you are right. We know that there have been some clampdown, in the past 3 or 4 years, and that had a negative effect when it comes to the share prices of most of those stocks.
I think they're also just thinking around, their own economic growth to just stimulate that growth, considering that there has been a slowdown on that front as well. Let's get into some company news. Downbeat economic growth in China, actually dampening BHP's results, but they are quite optimistic about their prospects. Are you just as optimistic about those numbers?
I am, going forward, the guys are seeing some recovery, and it makes sense. We've seen that global interest rates have been going down, and we know that some of those metals, the likes of copper, definitely will continue to be in demand. But what affected them, unfortunately, affected most of those global diversified miners, that if the economy is not growing, then definitely there won't be demand, and definitely our prices will go down. But going forward, we hope that as we said about China, probably they start stimulating the economy the right way because they've been doing that. Hopefully some of the policies that gets to be implemented in the US, your tax cuts, stuff like that, starts helping the US economy to grow. Then hopefully we'll start seeing global economies picking up. Then by all means we'll start seeing some good demand coming out of that.
We talk about low growth, we talk about low prices of metals, and that one of the issues weighing on Kumba Iron Ore, they're reporting falling revenues and profit on the back of lower iron ore prices, but they also have to deal with real issues here at home. Just, take me through your thoughts of those numbers.
Kumba, by working with the government, it's a good thing. It's what we've just talked about with China and their tech companies, that they have to work together to sort out this problem. And it makes sense. If your prices are down by 21%, if your sales are down by 2%, if the rent firmed, by 1%, then definitely that will have a negative impact, going forward. But I think maybe to console ourselves, these results are all backward looking.
Yeah.
The issue here is going forward, are we optimistic that things will shape up? And definitely we hope they will shape up and the guys will start doing okay. And you said something important about the rail. For us, other than the prices and the global economy, continues to be our logistic issues. That gets to be sorted, then other companies as well, other than Kumba, will benefit from that.
Rails and ports issues really dampening prospects for them, but they are working with government, so we can only wait and see. Let's move over to Anglo American, just sticking in that Anglo stable. So they've sold they're planning to sell their nickel business to a Chinese company for about 500 million rands. That, obviously they're making progress with their restructuring efforts. They've also announced, plans or rather progress of the demerger with Amplats yesterday. So it seems like, they're really getting things in shape when it comes to Amplats, when it comes to some of these other businesses. But, that diamond business is still proving to be a hard sell.
Definitely, it will continue to be a hard sell because the industry is not doing that great. That is the diamond industry, and we have seen, with the sales thereof. And I think we should give all the credit to BHP. I mean, for them approaching them, I think in a way it was a wake-up call. And by then the guys started saying, listen, we'll restructure and manage to unlock shareholders' value. And we have seen what is happening also with Amplats, as we said, and selling their business to be more focused on an iron ore and copper business. I mean, we know that copper continues to be one of those future metals, is very good for environment. So I guess it makes sense for them to be able to do that. And I don't think it's only them who are trying to put more focus when it comes to copper. And let's hope that they get to sort that out. Even if they don't end up selling DPS now, at least if they make significant progress, manage to get at least 70% of their plants, being sorted out, I think as shareholders will be happy.
All right, let's just hit pause on that conversation for now. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
So I think if you just look at ASML, obviously, these shares react very quickly on quarterly results, which are, in my mind, very short-term of nature. So the last sort of quarter or two, they've actually come off their highs substantially, just with a bit of a softer outlook looking forward in terms of earnings. A little bit of protection sort of where they are in terms of protecting the high valuation that they achieved. But if you just look at the business, what it does, the cash generation it does is great. I mean, it's unbelievable. There's a big annuity component to the business as well as the valuation. The valuation is looking very cheap relative to some of the other chip makers out there. And obviously, you've got that annuity side. So predictability of earnings is there for me. Might be a bit softer looking forward from the recent sort of quarterly results that we've seen. But I think, the pullback that we've seen in the share price certainly is a good medium-term buy for me in terms of a good quality business that certainly deserves a place in the portfolio. So using the pullback over the last 6 months as a buying opportunity to stick it in the portfolio.
Yeah, I'm reluctant to punt a value share because valuation-based investing has been a dead end for 15 years. But Sasol looks pretty cheap. I mean, it was 400 Rand 3 years ago. It's 79 Rand today. I guess if you're going to punt a value opportunity, you've got to say there's valuation, 2.8 PE, and then you've got to identify potential catalysts because valuation by itself is not enough. And The value in Sasol, about 40% of the market cap is represented by their 50% remaining in Lake Charles. So there's a very significant restructuring opportunity were they to sell Lake Charles. And I have to say, for the first time in many years, Sasol has a good chief executive in Simon Beloy. I think he's an energized and competent manager. And I think if anyone can get a restructuring of this business done, it's Simon. So I'm kind of backing him eventually to unlock value, most likely by selling Lake Charles.
Shane just reminding us where Sasol was 4 years ago. 400 Rand, Makwe. 400 Rand.
At some point it was more than 500.
I remember this. All right, your take on those picks, ASML and Sasol.
ASML, I think on the annuity part of things, I think is worth looking at. My problem is that with these companies are priced for perfection. The valuations are just too rich. So I think instead of dipping into it, if I was owning one, I will just hold it. And I don't think it's a stock that I would recommend to go and buy now, because these things are priced for perfection. And we still have to see, whether these things pay off ultimately. People have made great investments into these things. Look what DeepSeek did, It managed to shake the world, so that's very important. Sasol, yeah, but I don't think on the back of selling, because already they sold 50%, of that Lake Charles. So if you have to sell everything, going forward, it's going to affect your earnings. So I think for me at the back of, if the economy starts picking up, then chemical prices as well starts doing okay, then I think it's worth a hold.
All right, let's get into your stock pick. We've got about 20 seconds.
I'll buy the S&P index, that is the US index, because I'm hopeful that the policies that Donald Trump will implement locally for the economy will lift that economy, and those companies will do great.
Hopefully they won't, hurt our economy, Makwe. Anyway, thank you so much for joining us. So that was Makwe Masilela from Makwe Fund Managers.